with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's going crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, February 14th, 2025. So happy Valentine's Day, one and all. I hope you have a wonderful day. Before we jump into it, I've got to make a confession here. I'm actually recording this show before the market closes on Friday. I'm actually traveling, so it's 8:30 in the morning U.S. time. I'm recording this on Friday. So the market hasn't done its thing yet today, but I got a pretty good handle on how things have been. I can still have this conversation. We're on vacation in Curacao, by the way, so a big shout out to Gary, who I do think is tuning in this week. I think the guy's got the most beautiful home in the entire country. We've had a wonderful time. Normally we vacation right at our house. We love our house. We love our home. But in the wintertime, when it's cold and snowy, we like to try to find a couple weeks to get away, get some sunshine and some vitamin D. So another shout out I want to make is to my office, BIG. The group of folks I work with there are the best in the business. When I'm away, I'm watching the markets, but I don't have to watch the office because they're just handling it and making sure everything is taken care of all the time. I've got the best team in the business, hands down, no doubt about it, in my opinion. So big shout out to them. So, hey, what's moving markets this week? Well, let's talk about this. I got a couple emails last week pushing back on my soapbox speech there regarding the media and everything else. So a couple of things. One person wrote me back asking what my problem was with Fox News. Okay, my problem with Fox News is they politicize everything. Okay, March of 2023, 2 banks in California went under. There's very specific reasons for it. Had nothing to do with the banking system as a whole. And I had little old ladies calling my office wanting to know if the money in their local bank was safe because Joe Biden was president. I'm like, where are they getting this from? So I watched Fox News that evening and I found out where they were getting it from, because they were actually saying that people's money in their banks were at risk because Joe Biden was president. That stuff just makes me disgusted. I can't stand it. On the other hand, this week's a great example. On the other side, right? There's a misstatement made about $50 million being spent to buy condoms for people in Gaza. And the media's just had a field day about it this week because that was an incorrect statement. It was actually money spent to buy condoms in the Gaza district of Mozambique in Africa as an AIDS prevention thing. And all they've done this week is rail on that and make fun of it. Well, how about not doing that? Instead, why don't you correct the statement and then tell the whole story? Okay, it's not $50 million or $20 million. It's actually $120 million over the course of the last 5 years or so that's been spent to buy condoms for people all around the world. Okay, and the problem that I've got with that is around our office in Dover, Delaware, there's a good 30 plus people that are addicted to drugs and homeless in the center of our city. And we are buying condoms for other countries. Here's some other facts for you. $2.5 million to promote diversity and inclusion in Serbia, right? How about $160 million to build electric buses in Canada? Guess what happened with that project? Yeah, the company went belly up after they got our $165 million. This goes on and on and on. I'm not going to go do that today. The point is this: we've got serious problems. Love him or hate him, Trump's team is tackling this in a major way. And listen, I know folks that are very far left of center in my industry that know the numbers, and they are actually pretty pumped up about the whole DOGE thing, because every economist knows that when the government is bloated, that's money that's being sucked out of the private markets where it's much more productive and much more useful and beneficial to society as a whole. So if they do a successful job at reining this in and pulling this back, it should equate to some really good things for our economy over the long run. But I'm going to take it a step further. This is real stuff, folks. This is real deal stuff. We have a problem. We are in a debt spiral. Now, what that means is that we are having to borrow money to pay our interest. We're having to borrow to pay our interest. Think about that for your own household. If your credit card debt was so high and your auto loans and mortgage, you were so debt-ridden that you had to borrow money every month to make ends meet, how long are you going to last? You're not, okay? Listen, we had 2 bond auctions this week, a 10-year and a 30-year bond auction. They were terrible. They were maybe C-, D+ at best. They were not good auctions. Countries are not wanting to buy our bonds. They see the situation that we're in. They're not wanting to buy our bonds. Guess what they're buying instead? They're buying gold. Gold is going up because central banks around the world are not buying U.S. treasuries. They're buying gold, and it's concerning, and we've got to fix it. And if the pendulum swings too far the other direction, and we have to course correct, that's a much better mistake to make. Trust me, it's a much better mistake for the pendulum to swing too far the other way and have to course correct to bring it back versus not swinging it far enough and this debt spiral running out of control, okay? So love him or hate him. And look, there's plenty of things I do not like about President Trump. Do not get me wrong. I got a list of them, okay? He makes me scratch my head more than once, usually daily. But they're tackling this issue and it needs to happen. Now, speaking of President Trump, this week has been a roller coaster ride. Coming into the week, markets were soft because of tariff talk at the end of last week, but they kind of smoothed out. And then we had inflation numbers Wednesday and Thursday. The CPI number was terrible, the Consumer Price Index. You may recall our newsletter, our 2025 Outlook podcast, we stated that moving forward, we felt the biggest risks this year were going to be inflation and the uncertainty of political policies as they rolled out, okay? There's going to be some 2 steps back to get 3 steps forward with these political policies. So far, that's exactly how the markets are reacting to things. The market took a real beating on Wednesday on that hotter than expected inflation number. It then recovered because then on Thursday, these reciprocal tariffs that were announced last week were announced with more detail on Thursday. Trump signed this executive order. And a couple of things about this, they sound to be very even-handed. They sound like they're going to be well thought out. They're not going to be too arbitrary. And they've also been pushed out to April 1st. So there's some time for negotiating and things like that to take place. So the market responded very positively to that. But then on top of that, I think the market responded incredibly positive to the impromptu hour-long press conference. No notes, no teleprompter. This guy just took every question from everybody. And although he said some wacky things, Canada, again, 51st state, I'm not sure what he's driving at there. But anyway, one thing that jumped out big time to me yesterday, he is the first and only politician I have heard since the onset of the Russia-Ukraine war that has called out what I believe is the root of the problem. And I say I believe it. You go back 3 years ago, listen to the podcast, February, March, whatever it was, 3 years ago when this war started. I said then I did a deep dive. I did tremendous research on Putin and his viewpoints on all of this and discovered what I felt was a problem. And the problem was this. After the Cold War, the United States did not uphold our end of the deal. We said we would not move NATO any closer to Russia. We're going to keep the boundaries where they were. We did not uphold that. We, in turn, let everyone come into NATO, all along the Ukrainian border, right? Lithuania and Poland, all these countries, all come into NATO. 2014, Ukraine elected a pro-Western president. That's when Putin started to lose his crap. He started getting very concerned because NATO had already moved up to the border of Ukraine, and now Ukraine had pro-Western president. And he started talking back in 2014 that this was unacceptable. Well, then, and Trump said this yesterday, right before the Russia-Ukraine war started, it was said by our administration that we are open to allow Ukraine to join NATO. And he said when he heard that, he knew the war was going to break out. And that's exactly what I found 3 years ago in my research. That was probably the cause of this war. Well, he's on top of this. And that makes me very hopeful. There could be a negotiation here. I think one of the main things that has to be done is Ukraine just has to be told, no, you will not be allowed to join NATO. Because that would be like having Russia take over Mexico or China take over Canada right along our border. They don't want that. It's understandable. I get it. So maybe a deal will be made, which, by the way, will be great for Europe, which, by the way, is on fire year to date. We made a huge move beginning of the year, put a bunch of money into Europe, and it is just killing it. I'm very, very pleased with how that has been performing. The investment that we put there up 12% year to date. Now, as for the markets, what they did this week, up for the week, if it holds today, and I think it will. It may be down a little bit, but I think the gains will hold for the week. Dow Jones, as I'm doing this recording, is up 1%, S&P up 1.5%, NASDAQ up 2.1%, Russell Small Caps flat on the week. Volatility index down a little bit. Long-term bonds flat on the week, just down about 0.5%. Not a whole lot of action there. And when you look at the sectors, everything did very well this week except for healthcare and financials. They were laggards this week. Gold, of course, remains on fire. Earnings have been, that's what earnings have been. They've not been great. They've not been terrible, but they've not been great. And my concern with earnings is what I mentioned last week. It's not the earnings that are being reported now. The concern that I have is earnings expectations are accelerating to the downside. Estimates moving forward, the revisions that they're making are accelerating to the downside. And as I mentioned last week, this historically is a problem. Now, when you look at everything that's going on right now, another big issue we're being faced with is this reduction in federal employees. I mentioned in our newsletter in 2025 Outlook that the government was 30% debt to GDP, and that if DOGE, the Department of Government Efficiency, did their job well, it could actually cause a recession. And now that the voluntary buyouts has expired, that deadline's expired, it was announced last night that thousands of federal employees are going to be laid off at this point moving forward. That is a concern. And I think that that concern lines up to our longer term concerns about the market and potential recession, because I think 2026 is shaping up to be a questionable year. And we're probably going to start feeling the real pain from these moves around that point in time. But again, short-term pain for long-term gain. You have to crack eggs to make omelets. There's no other way about it. There's no other way to get through it. So I think all this stuff is kind of lining up to equate with maybe some softness down the road. And I'll say this too. When you look at the cycle of the market, when you look at the cycle of the bull market, I think we're in the late stages of this bull market. We are in what we would call the optimistic stage. There's very little pessimism, a lot of optimism. Markets are elevating. They're staying elevated in the face of news that should knock them lower. The next stage after the optimistic stage is euphoria. We're not in euphoria yet. It's clear to see it when it's happening. I don't see it at all at the moment, but that's usually the last and final stage. And the market usually breaks during the euphoric stage where everybody just can't wait to buy stocks, right? Everybody wants more stock. That's the time to get getting out. Right now, we're in the optimistic stage. I think a correction can still be in front of us here. Understand this, we are getting ready to enter one of the worst seasonal periods of all time, okay? The end of February into March is a terrible seasonal period. In a post-presidential election, the first year of a new president, it is really bad. It's a really bad time of year. Starting today, February 14th, into March, tends to be a terrible time. The market looks extended still to me. It has done some digesting, okay? It's been going sideways for a while now, but there's still indicators to suggest that it's still pricey. We're right up against that ceiling that we just can't seem to break above with authority, that 6,100 level on the S&P. And I'll say this, if we can break out above 6,100 with some authority and really confirm that breakout, make it solid, then maybe things are going higher for longer. However, if we fail here at the 6,100 and we drift lower, I think we're in store for a bigger move to the downside. I think a test of the 200-day moving average around 5,700 on the S&P, 7% or so lower from here, 7 to 8%, I think is likely. And we are going to sit on our hands and wait for this to unfold before we start making any major changes or purchases or things like that. We got some cash on hand. I like where we sit, and we will take advantage of whatever opportunities may come our way. So I'm going to wrap up. I know it's a little bit long. I had things I had to cover, right? I had to talk about some stuff there. Hopefully in coming weeks, we can shorten this back up again to the 10 minutes that you're used to. But look, between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money, maybe it's buy the most beautiful home in the country. Congrats, Gary. Maybe it is retire a little early, take that next big trip, write a book. You know, I've got a couple folks writing books these days. Good for you. Hey, you know what your goals are. Don't just think about them. Think big. Think big. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.